people talk about immigration,
Yes.
student visas, and so on. And now for the first time in a long time, we're seeing some market rents falling. We're seeing a lot of the condo developers putting projects on hold.
Yes.
People are talking about switching to rental. Some are, a lot are.
More than talking.
A lot are. But there's still a little bit of choppy water out there. Like give us your framework for multifamily housing today.
Yeah. Choppy water is...
I love it.
Yeah.
Very bullish.
So we like it in our strategy, but call it 38% of our real estate equity book in Canada is res.
Okay.
And we were one of the first major institutional investors to go big in res in the sort of 2006-07 time horizon. So we fundamentally believe in res because we do believe that Canada will continue to be an immigration nation from the perspective of growing the population. Population growth is going to come from immigration.
Yeah.
It's not going to come from natural population.
No.
So that will continue to be relevant. Globally, we continue to see people moving into bigger cities. That does happen. Canada, interesting dynamic with Toronto being unaffordable and folks moving out of the city. Yes. But globally, we continue to see cities grow. We continue to see households grow, which is different than populations. Right? So as a side note, look at Tokyo. Tokyo, demand for rental accommodation is very strong, but Japan's population is falling.
Right.
So that's a case in point for what I described, which is people still moving into Tokyo, family units getting smaller, divorce rates pretty high. So we see, and I just used Japan, but I could give you Finland and unfortunately in terms of divorce rates, Canada.
Right.
So there will be demand for rental. No doubt about it. We will have immigration in this country.
I never linked those two, but that's a good, okay.
So we're going to have demand. Is there short-term choppiness? Absolutely. Is there major stress in the condo market? Yes. Right. And for a long time, capital values in the condo market ran ahead of what folks received from an income perspective to carry said condos.
Yeah.
And we just, that's not a new story. That's, last 10 years. And it's grown and grown and grown. And it's hit the breaking point at this point. And so, yes, that is a dynamic that's going to take time to sort out. And the time will be 2025. It'll be next year. We'll be still sorting it out because there's a lot of condo deliveries. And I would submit it's likely to extend in 2027 and might go even further. I mean, we have lived we've lived a cycle before. You just look at the early 90s. And it took a while for that to work its way through. Now, is it going to take as long as it did in the 90s? And yes, the 90s had a recession. Yes, the 90s had a commercial market situation in addition to resi. So it's not perfectly analogous. But the reality is there's condo inventory still to be delivered. We have changes in the immigration dynamic that are being implemented this year, next year, in 2027. Temporary population, which was at 7.4%, now is at 7.1%, and is going down beneath 6. I believe it's 5.7%. So we have a ways to go. So therefore, I see no near-term change in the condo market. Meanwhile, you have, projects transforming into rental.
Yeah.
And if you look at the pipeline, there's going to be a lot of rental being delivered. So my hunch is we're going to be making major strides in our affordability problem.
Right.
And, writ large for the country, that's not a bad thing. Now, the government's going to underwrite a lot of those major strides. And when I say that, you have to caveat. Because on the one hand, yes, CMHC plays a major role, right? And yes, municipal property tax abatements is important. But you also have to look at the other side, which is the cost of construction, right, is heavily laden with government taxes and fees, one way or another. So it's take from one hand and give with the other.
Yeah.
But net, yes, the affordability problem will become less dire. And that is not a bad thing for the country. It's a bad thing for certain participants in the real estate industry that might have bought at the top of the market land and now are sitting with it and will have to sit for quite some time.
Right.
But net, we will get through it. There will be more rental delivered. And just like other pieces of the real estate world that has gone through a cycle, we will be going through one in the rental space. But that doesn't mean the space is not strong. It is a strong space with high occupancy.
And still, just because of the condo inventory and then the rental inventory in 2025, 2026, and 27.
Plus immigration changes.
Anticipating lower rents, at least up until that point.
Yeah, and that's a headline story, right?
Yeah.
You also there's a lot of apartments where folks are paying in-place rents that's half of market.
Mm-hmm.
So market rents might come down, might not actually impact your NOI line if you own that apartment building.
Right.
Now, also a dynamic was turnover used to be 33%, right? It's fallen down to, in certain places, 9%.
Yeah.
So, and that's just a function of, right, of in place being much lower than market. Well, as that dynamic changes, turnover might change as well.
Right.
So there are many pieces to that story that that's why I say writ large, the sector is still very strong, right? But it's certain places in that sector that, it's going to be more challenged.
Yeah.
Right? A $2.50 rent story and leasing of that property is very different than relying on $7 rents.
Mm-hmm.
Right. So it just it all depends. And I think that's a broad theme in real estate. I'm not fully there on this theme, but certainly the last decade has been closer to a set and forget it sort of decade where you're playing more sectors, right? Overweight beds and sheds.
Yeah.
And you're good.
Easy.
Right?
Yeah.
I'm not sure it's that straightforward or simple for the next 10 years.
Yeah. You have to be really specific with your business plan and execute.
That's right.
Not relying on cap rate compression.